Oliver. We had numbers this morning from Credit Suisse, and we had what looks like another attempt to shrink the investment banking side of the bank. Neither of them looks very, very sort of convincing. The shares are down 3% today. What exactly is the bank doing?
Well, on the one hand, as I say, we had third quarter results. They were a bit disappointing. Particularly, there was a bad quarter for the fixed income trading part of the investment bank. Now, everyone's had a poor quarter for fixed income trading, but the Credit Suisse really wasn't great, and it was slightly disappointing. I think third quarter trading revenues from fixed income down about 42% against where they were in the same quarter last year. So not a great trading performance. I think that's one of the main reasons why the share's down 3%. But alongside that, it said it's restructuring a little. It's not a major restructuring, but it's setting up this, what it calls a non-strategic unit, so a non-core unit, into which it's putting some parts of its trading business, such as rates trading, which are not so profitable to run, given the new capital requirements. Also legacy assets, various litigation exposures, that sort of thing.
Right. Now, we all know the problems that investment banks face. Is this step by Credit Suisse radical enough, do you think?
It could be more radical. It's certainly not as radical as UBS was. Last year, UBS announced a very large step back from its investment banking business, again, particularly its fixed income trading business. This from Credit Suisse isn't anything like the same scale. Just to give you an idea, the non-core unit at Credit Suisse is going to be about 10% of total assets. Over at UBS, the non-core unit into which it's put everything it's going to run off is about a third of total assets. So
right.
a much bigger scale.
Yeah, maybe Credit Suisse's problems are not as big as those at UBS, though.
They start from different positions. Certainly, Credit Suisse always had a bigger and stronger fixed income trading business since than UBS did. So it made more sense for it to stay in, and it still makes sense for it to be in that. But if you invest in Credit Suisse, you've got to take the rough with the smooth, and certainly the third quarter was a rough quarter, and the question really is whether they kind of pull out of it just before the smooth comes along.
Right, but it's still one of the sort of main investment banks standing.
It is, yes. I mean, along with Deutsche Bank and BNP Paribas and Barclays, and to an extent UBS, it's still one of the main European universal banks.
Okay, well, we had numbers and a mini restructuring this morning from Credit Suisse, and is in line with lots of other investment banks. It's an indication of the difficulties that the sector is facing. Thanks, Oliver.